A special thank you to each of our subscribers who make this channel possible. Here's today's story. As speculation mounts ahead of next week's budget announcement, significant changes to the UK's inheritance tax, IHT, are on the horizon, with the potential to raise billions for the government. Currently, only about 1 in 20 estates in the UK are subject to this tax, but that number could increase dramatically if proposed reforms are implemented. The standard IHT rate stands at 40%, applicable only on the portion of an estate exceeding the tax-free threshold of £325,000, a figure that has remained unchanged since 2009. This long freeze, coupled with rising property values and investments, is gradually pulling more estates into the IHT net, a phenomenon known as fiscal drag. In the 2021-22 tax year, inheritance tax generated £5.99 billion, and this figure skyrocketed to a record £7.5 billion in the 2023-24 tax year. The average IHT bill for estates that paid the tax was approximately £215,000, but due to various allowances and reliefs, the actual average rate paid was closer to 13%. This discrepancy has led some think tanks to argue that there are significant untapped revenues within the current system that could be harnessed through reforms. One of the most contentious areas of inheritance tax involves the exemptions and allowances currently in place. For instance, spouses and civil partners can transfer their estates to one another without incurring any IHT. Moreover, the Residence Nil Rate Band (RNRB) allows estates to pass on an additional £175,000 tax-free if their home is inherited by children or grandchildren. This means that a married couple could potentially pass on up to £1 million tax-free, comprising 2 individual allowances plus the RNRB. However, experts warn that changes to these allowances could significantly affect many families. Sarah Coles from Hargreaves Lansdowne pointed out that if the surviving partner's tax-free threshold were reduced from £1 million to £500,000, it could push many families, especially in high-value areas like London, into paying inheritance tax. Additionally, there is growing speculation that the government may tighten the rules surrounding gift allowances. Currently, individuals can give away £3,000 per year without it counting towards their estate for IHT purposes. However, potential changes could extend the current 7-year rule for potentially exempt transfers to 10 years, complicating the landscape for those making large gifts. Further, the government may look to revise the rules for investments in smaller companies, particularly those listed on the AIM market, which currently enjoy 100% relief from IHT after being held for 2 years. Removing or altering this exemption could yield more than £1 billion annually in tax revenue. Family farms could also be at risk, as the government considers scrapping reliefs that allow landowners to pass down farms to their children without tax penalties. Business property relief and agricultural property relief currently enable estates to significantly reduce their IHT liabilities, but these could be capped or altered, leading to increased tax burdens on family-run businesses and farms. In conclusion, as Rachel Reeves prepares to unveil her budget plans on October 31st, the implications of potential changes to inheritance tax are vast. With the possibility of increased tax liabilities and reduced allowances, many families could find themselves facing unexpected financial challenges. As always, the topic of inheritance tax continues to evoke strong emotions, and the government's approach could redefine the financial landscape for countless households across the UK. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.